Right, everyone, another daily crypto roundup where we try to get through everything that's going on within risk-on assets, specifically the digital asset space, in under 10 minutes. And of course, as per usual, we'll start off with some of the asset prices, which I'm sure you are already aware of what they are, considering that we always check our portfolios about 500 times a day. And unfortunately, the crypto market cap is actually just under 1 trillion. It's actually 993 billion at the moment. So we've been, ever since the Jackson Hole meeting on Friday, we were over 1 trillion. I think 1.1 trillion potentially. Or just around 1.05 trillion, I think, off the top of my head. And so we are under that 1 trillion 1 trillion mark in terms of total market cap. And of course, ever since Friday's Jackson Hole meeting, where the Fed said they will be very data driven and they will try and bring inflation down, which by virtue means continuing to raise interest rates, which obviously affects money supply, which is not great for crypto. So we can see Bitcoin's down 5% for the week, Ethereum's down, XRP's down, Solana's down quite a fair bit. I'm not going to mention Dogecoin. Polkadot, Polygon's up, Matic is up slightly for the week. US market opens in 1 minute. Equities were down around, S&P was down, I think around 1.5% yesterday. So it'll be interesting to see what happens with the equity market and specifically, obviously, the NASDAQ, because the NASDAQ is very highly correlated to digital assets. So without going on about our portfolios somewhat, because we all know that it is not great at the moment, we're going to be talking a bit, to be honest, the majority of this 10 minutes is going to be taken up by Bitcoin. We're going to look at some Glassnode data in terms of how old coins and how old coins have been moving around, and we're going to be talking about Bitcoin mining as well. And without further ado, we have some interesting economic data that has come out today, which is CPI data for parts of Europe. And of course, we all are very aware of what's going on in Europe with the energy price, which is obviously has a massive impact on CPI data. So this morning we saw French CPI data come out at year over year for August at 6.5%, slightly down from consensus, which is good, at 6.7%. We also saw Italian CPI data come out for year over year August at 9%. But really it's the month over month we're looking for, and that is 0.8% up from a consensus of 0.1, and the previous month over month for July was negative 1.1, so slight uptick there. And we also have some GDP data for Canada, and we've also got the employment change as well, and Chicago PMI index, purchasing managers index coming out in around 14 minutes. And then Thursday's a big day, certainly in the US. We've got a lot of data. We've got the big number from the ISM manufacturing PMI, which will be interesting to see. My theory is that it goes below consensus, probably around about 51 is my initial thoughts, as manufacturing starts to decline. So we will keep an eye on that. And then on Friday, we've got non-farm payrolls, which is really important, and a few other bits and pieces around hourly earnings, unemployment rate, etc., etc. So, interesting stuff going on this week, which we will obviously pay very close attention. And shifting gears to Bitcoin mining. This is from CoinDesk. Bitcoin mining difficulty poised to spike by most since January amid colder weather. And this is, some analysts are starting to see this as a new seasonal trend in Bitcoin mining. So the difficulty of mining Bitcoin is expected to grow by around 9% on Wednesday as miners in North America begin ramping up production ahead of cooler months. It will be one of the biggest upticks since July 2021, where miners begin to come online after, obviously, Bitcoin mining was banned in China, which at the time was home to 44% of mining activity. And it was incredible how that just got switched off and was instantly taken up by other miners around the world, mainly in Texas. Texas is certainly one of the places where they are very positive around Bitcoin mining, which is always good as well. And the hash rate of the Bitcoin network dropped in mid-July as miners in North America powered down during heat waves that swept through the continent. And obviously, as miners drop off, the ease of mining Bitcoin becomes, the hash rate becomes easier, and it's easier to mine Bitcoin, which is interesting stuff. And as CoinDesk rightly points out here, as many miners have since moved to Texas, bumping their energy consumption in the state to about 1.5 gigawatts, where temperatures run hot in the summer. The opposite trend might emerge, so network difficulty drops in the summer months when sharp increases occurring in the fall and winter months as miners come back online, which is good. Staying on the Bitcoin story, obviously that's somewhat similar with Cointelegraph. Bitcoin mining has never been more competitive, even as BTC loses 13% of August, and obviously they're associating that with the cooler months in Texas and more miners jumping on the network as well. And we can see a nice chart here about difficulty jumping up over the years, and as you can see, it's hitting somewhat new all-time highs there. So we will obviously keep an eye on this and see how this comes. And obviously Bitcoin's price is not reflective. And there's been plenty of talk around Bitcoin miners and how much potentially they might dump on the market as they need to pay electricity bills, staffing costs, all the usual stuff that comes around running any type of business. So we'll keep an eye out on that as well. Okay, and shifting gears over to Europe, this is very interesting because I've spoke about this a lot, how the constant rise of the German power price continues on this upward trend, going over €1,000 per megawatt. And here we can see, and this is from Holger, I'm not going to pronounce your surname, Holger, apologies. He's obviously screenshotted his Bloomberg terminal, and you can see German 1 year ahead power prices almost halved within 2 days, from over €1,000 per megawatt to €545 today. This raises the question of who is operating in the electricity market. Is it pure speculation, or are these meaningful prices that reflect real scarcities, which is super interesting because now we're coming back down. And this is obviously the chart for August. If I just enlarge this somewhat so you can see it. We've seen it 600, 500, so 400 megawatts back in early August, all shoot up all the way over €1,000 per megawatt, and now dropping down pretty much in the past 3 days to €545 per megawatt hour, which is incredibly interesting that it can fluctuate this much. This shouldn't be energy price and power price. This looks like a graph of an altcoin, which is unbelievable. And this is the craziness that is obviously going on across Europe as well. And then whilst we're on the energy market as well, I saw this from Alan Farrington on Twitter, and this is obviously bullish for digital assets, certainly Bitcoin. In case anyone is feeling at all optimistic, remember that this is much worse than just energy. This is the accumulation of 10 years plus of near universal capital misallocation. Everything is broken, and the only way out is to print money. and what seems like every central bank's option, certainly in Europe with the ongoing energy problem and energy price, is printing more money, or even the newer version of quantitative easing, which is literal direct handouts through stimulus checks to help people pay for their energy bills, which is by virtue printing money. So again, this is only positive news for Bitcoin as well. And then whilst we're on Bitcoin, anyone who doesn't, you need to get this Glassnode email that they send out every single day. It's really interesting, with some interesting statistics and data around Bitcoin, and obviously they do other cryptos and Bitcoin. And I saw what was interesting, as you can see, over the past pretty much 2 years or so, is the net realized profit and loss 7-day moving average. And this is obviously how many people are in the red or how many people are in the green. And we saw back in May with Tether, with Luna, and obviously some of the big drops that we saw back in June and July, and then obviously up to now, post-capitulation losses are declining. Fuel losses, but prices are still weak. And you can see the profit taken here back in late 2020, when Bitcoin went from lows of around $3,500 up to around $60,000, with obviously people taking profits as well. So that is everything for today. We'll keep an eye on some of that economic data that comes out tomorrow, ISM manufacturing, which will be really, really important. And I will see everybody tomorrow.